Hello, traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we're going to explore the EMA day trading strategy, which is a proven method to identify trends and time your entries and your trades effectively. So, by the end of this video, you understand how to use EMA step by step and avoid common mistakes that could cost you. So, stay tuned to learn how to refine your trading approach with confidence. So, without wasting any much of your time, let's get started. So, EMA is a very popular indicator and we have it on our charts, a very popular moving average. And this technical indicator helps you track price movements by emphasizing recent data points more heavily than other ones. Unlike the simple moving average, which treats all data equally, the EMA adjusts quickly to reflect current market conditions. This makes it particularly useful for identifying short-term trends and gauging momentum. So the calculation of EMA involves a smoothing factor that determines how much weight is given to recent prices. And as a result of this, uh, the formula may seem very complex, but trading platforms automate this process like this is TradingView and it has already automated it and you have your moving average line on the charts without needing to calculate any other thing. The responsiveness of EMA makes it ideal for fast-paced markets where timing is crucial. So the EMA acts as a dynamic indicator on your chart. When prices approach a rising EMA, it often serves as support, and while a falling EMA can act as resistance. You can see that happening right here. See pricing it as resistance, failing to go above that EMA, using it as resistance to keep pushing all the way down. So price can use the EMA for support and resistance. And also this behavior allows you to assess whether the market is trending upward or downward. Shorter period EMAs such as 9 or 12 days are commonly used for quick signals, while longer periods like 50 or 200 day are commonly used to identify overall trend in the market. So in the next section, I'm going to discuss how you can apply this indicator step by step in your day trading strategy. So ensure you watch until the end as this is the most important part of the video. So to use the EMA effectively in day trading, you need a structured approach that combines trend identification with precise entry and exit points. The first step is to start by setting up your chart with two EMAs. You need to set up your chart with two exponential moving average, a longer period exponential moving average, and a shorter period exponential. The shorter term EMA, we could use the 9 period EMA, and for the longer term, we could use the 21 period EMA. And we have them on our charts. The 9 period is the blue line, while the 21 period is the red line. These two lines will help you identify the direction of the trend. So when the shorter term EMA crosses above the long term EMA, it signals that the market is trending upward, and this is often referred to as the bullish crossover. We have that happening right here. So on the other hand, when the short term EMA crosses below the long term EMA, it signals a bearish crossover, which could suggest a selling opportunity. These crossovers are key moments to watch out for in your trading. So to confirm these signals, look at price action around the EMAs. You shouldn't just see the crossover and just jump into the trade and start selling or start buying. It is not advisable. The next step is to watch out for price action after you've had this crossover to the upside. The crossover just means that we are now bullish and we should be looking for opportunities to buy or to sell in the market. So, for example, we are here on this chart and we have this level as an area where the moving average has given us a confirmation for buys. So the next step is to look for um, indications to actually enter a buy trade here. We have this gap here, have this FVG gap here, and we have price coming to fill it in here. So this could be um, an opportunity to enter a buy trade and target all the way 1 is to 3 or 1 is to 4, depending. Or you could just target this structural high to break structure to the upside as a significant resistance level, and we smash TP with that. And for sell trades, you could just look for key levels, like I said, key resistance levels. For this one, you can see this area is a top S&R, and you could just look to place your sells from here all the way down. Your stop loss could be above this high, and you'll take profits all the way down. You could target significant support levels like this one. And that's how you'll be able to take your trades. Remember to also use the moving average as your dynamic support and resistance level. I discussed that earlier. You can use the moving average to uh, so you can use it for your support and resistance level. You can see here that price is reacting off of the moving averages. As you can see, there is no major indication around here, which in this range, there's no there's no price action we could actually use in this range from this top to this bottom. There's no key level around here that we could actually use and say, all right, let's short from this area. But what we have is this moving average, the EMA, and you have price reacting off of it to give us the push to the downside. This is very valid. You can also use your Fibonacci from here to here, and price reacting off of the 50% also. This can serve as extra confirmation before you place that sell trade. And yep, that is how you can use the EMA for your day trading strategy. Now, there are common mistakes to avoid. One common mistake traders make when using EMAs for their day trading strategy is relying solely on them without considering other factors or other indicators or price action. And why EMAs are great for identifying trends, they are lagging indicators based on past price data. This means that they can sometimes generate delayed or false signals, especially in choppy or range bound markets. You can see that happening here. This is a very good example. Price is ranging here, and there are lots of false signals here. If you actually take a buy, once you see any of all these crossovers happening here, you may just end up in a loss. And if you take a sell, you also end up in a loss. So it makes no sense to be trading in a range bound market. So also should use confirmations from price action, Fibonacci, other indicators like the RSI to confirm your trades before taking any entries. Another mistake is overloading your chart with too many EMAs. Using multiple EMAs can create confusion and lead to analysis paralysis. Stick to one or two EMAs just like we have on our chart, the 9 period and 21 period combination, to keep your analysis clear and actionable. Traders often fail to adjust their EMA settings to match the market conditions or their trading style. For instance, shorter EMAs work better in fast moving markets, while longer EMAs are more suited for slower trends. Using the wrong settings can lead to missed opportunities or unnecessary losses. So if you want to change your moving average setting, just go here, you use the 20 period and the 50 period moving average instead, and you see how it will change. You see the change giving us reduced signals. Now we have one sell signal here all the way down, have one buy here. But if we were on the 9 and 21, we have had multiple signals around here, which could lead to so many false signals and so many losses as well. So another pitfall is ignoring risk management. Placing trades without setting stop loss levels near the EMAs can expose you to significant losses if the market moves against you. So always define your risk tolerance and stick to it. Do not go above or beyond it. So that is that for this video. Alright traders, you've come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you won't miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.